Hi everyone, welcome back to another exclusive podcast brought to you by IronFX. Here at IronFX, we are dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the Magnificent Seven. Now, for those of you who may not be familiar with the US equity markets, this today's podcast is going to be delving into the makeup of these Magnificent Seven stocks. What are they, and how can they impact the overall indices as well? Right. So before we dive into the Magnificent Seven and which stocks make up this magical number, first of all, we'll take a look at a brief history or evolution of how the Magnificent Seven came about. We actually have to rewind the clock and go back to 2013. Back then, for those of you who may be familiar with CNBC media personality Jim Cramer, he was the one who was credited with coming up with with the first popular acronym, which was the FANG, FANG, FANG. Now, this acronym back then was used to describe mega cap technology stocks that were experiencing high growth. So basically, high growth mega cap tech stocks. Now, FANG, this acronym came about due to the growth and strength of companies such as Facebook, Amazon, Netflix, and Google. So basically, FANG stands for F for Facebook, A for Amazon, N for Netflix, and G for Google. So that's where the first acronym came about. It was by Jim Cramer back in 2013. Fast forward to 4 years from then, coming to 2017, Jim Cramer expanded the FANG into much longer, to incorporate a second letter A. So he went from FANG to FANG. So basically, he went from F, A, and G. Now, this additional A was to include Apple, right? We all know Apple as this big communication device company selling iPads, computers, tablets. Tablets and iPads are the same, right? Phones and of course watches, right? So FANG expanded to include another A. So in this case, the F once again stands for Facebook, A for Amazon, A for Apple, N for Netflix, and G for Google. Now, fast forward to where we currently are in 2024. So recently in 2023, just over a year ago, there was an analyst from Bank of America. His name was Michael Hartnett. He began to use the phrase Magnificent Seven in 2023. So he used this phrase to describe high-profile technology stocks. Right. So once again, they were mega cap technology stocks that were experiencing high growth. Now, he coined this term by borrowing the name from a 1960s Western movie. The movie, of course, was also named The Magnificent Seven. So for those of you who may be interested in Westerns and have not caught this movie yet, perhaps this weekend would be a good opportunity to see if you can find this movie available on Netflix, Amazon Prime, or perhaps even Disney Plus. Right. So, in addition to these Magnificent Seven stocks being some of the most valuable companies in the entire stock market, they are also all focused largely on secular technology growth trends such as AI, otherwise known as artificial intelligence, cloud computing, online gaming, cutting edge hardware devices, as well as software services. Now, which companies actually make up the Magnificent Seven? Well, we'll start in descending order with respect to market capitalization. The largest company in the Magnificent Seven, based on market capitalization, is Microsoft Corporation, right? So Microsoft has a market cap of $3.1 trillion, followed by Apple at $2.7 trillion. Third in line is Nvidia, which is the current market darling, coming in with a market cap of $2.2 trillion. Alphabet or Google at $1.8 trillion. Amazon also with a very similar market cap of $1.8 trillion. Meta Platforms, formerly known as Facebook, with a market cap of $1.3 trillion. And finally, the smallest of the lot is Tesla at $554 billion. Right, that's the reason why Tesla's market cap is the smallest of the lot, and that's because its share price has not been performing as well as the others since the third or fourth quarter of 2023. Right, so in essence, Tesla is not so magnificent when compared to its peers in the Magnificent Seven, right, in terms of share price performance as well as fundamental earnings. So I would not be surprised if Tesla was eventually dropped, or if Tesla is eventually dropped from this list of Magnificent Seven and get replaced by another high tech, high growth company. Now, why is so much importance being placed onto these seven stocks? Well, we have to now go back to the two main indices of the US stock exchange. We have the S&P 500 and the Nasdaq 100. Right, so we just need to get a little bit of background knowledge on what the S&P 500 is, and also what is the Nasdaq 100, so that we can truly appreciate what impact the Magnificent Seven can have on these indices. Right, so the S&P 500 is a diversified large cap US index that holds companies across 11 major sectors such as information technology, financials, healthcare, energy, utilities, and a few others as well. Right, so because this is a much more diversified index as compared to the Nasdaq 100. The Nasdaq 100, as the name implies, tracks the 100 of the largest tech companies based in the US or listed in the US. So it's very tech centric focus, and there's no diversity with regards to sector allocation. Right, all the stocks are exclusively allocated based on the information technology sector for the Nasdaq 100, whereas for the S&P 500, as I mentioned earlier, it's a much more well diversified index. Okay, so now we know that S&P 500 is how the S&P 500 is constructed versus the Nasdaq 100, right? So that gives us a little bit of clues as to how these indices will also perform with regards to the Magnificent Seven. Do remember, the Magnificent Seven is a list of 7 companies that are focused solely on the tech sector. Now, if we look at the top 10 holdings of the S&P 500 index, we will notice that out of the top 10, the 7 of them are actually the Magnificent Seven, right? In no particular order, we have Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, and Tesla making up the top 10 holdings of the S&P 500. Now, when we look at the total weightage of these 7 companies in the S&P 500, they add up to 26.3%. Now, that's almost a third of the index. Now, this is very important because when you have only 7 companies that make up 26% of the total weightage, and do remember the S&P 500 is an index that consists of 500 companies, that means the other 490 odd companies have a weightage of about 70%. Now, as you can see, a very high percentage of the weightage is controlled by just 7 companies. So that means when the Magnificent Seven are having very strong returns in terms of share price performance, it means it's going to pull up the S&P 500 very much, right? So that means it's going to pull up the S&P 500 strongly. And even though the other 490 companies may not be performing well in terms of share price performance, perhaps they're going sideways, or worse, they may be in a bear market, but because the Magnificent Seven are doing very well, they are going to pull up the entire index. Conversely, when the Magnificent Seven enter a bear market and they correct very heavily, they're going to drag down the entire index as well. So despite there could be a potential scenario where you may have the other 490 companies in the S&P 500 do pretty well, but because the Magnificent Seven are actually correcting very heavily, they are going to drag down the entire index as well, right? It may not drop as sharply as how the Magnificent Seven themselves are dropping, but the index is going to be negatively impacted as well. So now we get a better understanding of how the Magnificent Seven can benefit the S&P 500 as well as dragging it down during periods of market corrections and bear markets as well. Now, moving over to the Nasdaq 100, this is a little bit more sensitive to the Magnificent Seven because, as we know, the Nasdaq 100 is an index that tracks the performance of the 100 largest tech companies in the US, or that are publicly listed in the US. right? So that means when the Magnificent Seven perform very well, the Nasdaq 100 is going to rise very strongly, and in such cases, it will even outperform the S&P 500. Remember, the S&P 500 is a more diversified index, which has also exposure to other sectors such as materials, energy, financials. So when uh, the index is going up, the S&P 500 index is going up, led by the Magnificent Seven, we may have other sectors, perhaps such as financials and industrials, that could be pulling back or weighing on the S&P 500. Whereas for the Nasdaq 100, because it's purely allocated to the technology sector, when the Magnificent Seven stocks are doing well, that entire index is going to rise very strongly. So in such a scenario, we will also get outperformance by the Nasdaq 100 versus the S&P 500. Conversely, when the Magnificent Seven pull back very sharply, the Nasdaq 100 is going to fall suit as well. It will also drop very sharply, and in most cases, it will pull back more than the S&P 500 purely because it is 100% tech-based index. Whereas for the S&P 500, you may have the Mag 7 pulling back, but you could have companies like industrials and energy and financials as well that could help buffer the drawdown and actually help to pull up the index overall. So that is why in recent times, especially 2022, during the bear market correction of 2022, we saw the Nasdaq 100 lose more in percentage terms than the S&P 500. Similarly, as markets bottom at the end of in November 2022, and started stabilizing and moved higher in 2023, and especially in 2024 with the advent and boom of AI or artificial intelligence, the Nasdaq 100 has actually outperformed the S&P 500 in terms of absolute percentage gains, right? So this is how the Nasdaq can also outperform uh, the S&P 500 when the tech sector is doing well, right? So I've come towards the end of today's podcast. I hope this has been a pretty good exposure and introduction to the Magnificent Seven. How did the phrase uh, evolve from Fang to Fang with a double A, and finally to Magnificent Seven, and also to understand which stocks make up the Magnificent Seven itself and how they can have a major impact on the S&P 500 index, the Nasdaq 100 index, as well as the overall stock market of the US. Right. So that's it. That's all from me for today's podcast on the Magnificent Seven. Do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe and trade safe. Thank you.